Changes are coming to Toronto's land transfer tax. Effective January 1st, 2024, homes above $3 million will be taxed at 3.5% and higher. So what does this mean for the luxury real estate market? Let's bring in Gillian Oxley, founder of Oxley Real Estate and a Toronto realtor that specializes in the luxury real estate space. Gillian, thanks so much for coming in.
Thanks for having me.
So this is a tax that already existed, but it's just being increased, and also it's going to get incrementally higher depending on the bracket that the home sells for.
Correct.
Okay.
Right now we have a provincial land transfer tax that goes across obviously all of Ontario. And within Toronto, we have a municipal land transfer tax that works in a graduated basis up until $2 million. And then it continues the same for everyone at 2.5%. Come January 1, that is going to change.
Okay, so that is what exists right now that we're looking at on the screen there. Mm-hmm. So over 2 million, that 2.5%. So maybe we can take a look at what it is going to be changing to, because it is quite a bit of a difference when you're looking at, the over 20 million category, you're looking at 7.5%, but over 3 million up to 3.5%, like you said, getting a little bit higher each time. And so what was some of the motivation behind this when it comes to, the city deciding to increase this?
Wow.
More money?
Okay,
yeah.
I'm ready for that one.
Yeah.
Listen, we're a growing city, and I think that they're looking at ways to raise capital to pay for all the infrastructure. There's a lot of people coming into the city. Our land transfer tax isn't necessarily on the same scale as a global marketplace. Los Angeles just introduced a luxury tax like this, and London, England certainly has one.
Right.
I think that it's taken us a little bit off center because no one's really talking about it, and it is coming. So if you haven't bought a home and closed before December 31st, this will impact you if you're buying a home above $3 million.
So how many homes are changing hands in that, category of above $3 million in this city?
In the industry I work in, which tends to be above $3 million,
right.
The majority of my business certainly will be impacted tremendously. And when we look at the average price of a home in Toronto, it's about $1.2 to $1.4 million. So your average buyer is not being impacted, but certainly the luxury market will be.
I think sometimes when we have conversations about the luxury market, even in these times of higher interest rates, and you're thinking about people buying homes in these categories, you think, oh, maybe they're fine. They're going to be okay to buy that house no matter what the interest rate is. So would this be a deciding factor when it comes down to a transaction, or, dissuade someone from maybe selling and buying another house if they have to tack this tax on, in terms of what you're hearing from clients?
I think it depends on the price point. I think the 3 to 5 million buyer is going to definitely be impacted. We consider that now in the city of Toronto about a mid-market buyer. An entry used to be, up to $500,000. An entry buyer now is really up to $2 million. So that middle market, this is non-financeable. You can't just package this into a mortgage. So it really will impact those people. I think when you get above $5-6 million, that 5 to 10 million bracket will be the same in terms of increase in the tax. I'm not seeing, I think everyone's going to be upset by it, but I think we'll accept it and we'll move on. So
impact-wise, you think things will sort of continue on as they have been in terms of what you've been seeing in the luxury market?
Probably much like the HST. When it first is introduced, we might see a little bit of a stall. And certainly November and December are traditionally very slow months, and we are not slow right now. Most of us working in the luxury market are working around the clock, trying to get deals done before December 31st. But I do think that there will be a little bit of a halt as we get used to it, and then we'll probably just accept it and keep moving forward.
So, that's really interesting, because right now we've, heard about sales declining and, these higher interest rates really weighing on people and, keeping them to the sidelines and not wanting to get into something right now with mortgage costs as high as they are. But you're seeing this uptick in activity that you think it comes down to the introduction of this higher tax. Overall, though, for the luxury market, what have things been like when it comes to demand over maybe a bit of a longer period, 6 months or the past year?
We've definitely seen a shift in the market. There's no doubt about it. This past fall was probably one of the slower times in the luxury marketplace. We've gone through 2-3 years where we really weren't in a traditional marketplace. And this is the first time since the inception of COVID that I'd say November and December are back into very slow months. However, you layer on this pressure of this new tax coming in, and we certainly are seeing around the clock work ethic going on right now.